Because that's the only way to transport that oil.
Thank you, Madam Chair. Dr. Zandi, I want to ask, it's kind of the chicken or the egg kind of thing. What impact has the weak dollar had on both petroleum prices, other imports, food prices? Because if you look at it, the gas prices haven't gone up in Europe because of the strong euro, but they're buying almost 1.5 to almost 2 barrels for our 1 barrel that we purchase. So, what impact has the weak dollar had on the economy, or has it been the economy obviously impacted the weak dollar?
Well, obviously it's both, but
yes.
Ask him to speak on his mic, please.
Sorry. On net, so far, the weak dollar has been a benefit to the economy in that the plus from increased trade has offset the negatives resulting from higher import prices, including the higher cost of oil and other commodities. Now, oil prices are higher and other commodity prices are higher because of the lower dollar, because these products are traded globally in dollars, and so when the dollar falls in value, to ensure that demand and supply globally remains the same, the dollar price has to rise. So there's a debate as to what degree the lower dollar has contributed to the run-up in oil prices, but by my guesstimate, roughly $25 of the increase in oil prices since 2002 is the dollar. So you go back to 2002, WTI was trading for $25. Now it's trading for $125. $25 of that is the weaker dollar. That's been very negative. So taken by itself, that's a problem. But in the context of the pluses on net so far, it's been a net plus.
So if we continue to increase the debt, I mean, over the long period of time, and I know we've talked about whether the taxes expire. I have children, a 3-year-old little girl and a 7-year-old little boy. What's the impact of our children if we don't have the revenues in hand and we continue to increase our national debt? I mean, we're ultimately going to get to the point where we're upside down, and what impact's that going to have? I know what the short term, we can talk about the short term, we can stimulate it all we want and we can continue, instead of $100 billion, let's put $400 billion in. But what impact is that going to have on my children's future, both 10 and 15 and 20 years down the road? If there's a shortfall in Congress that I see, is everybody looks 2 years ahead because that's their next election. So what's the impact that we're going to have 10 years, 15, 20 years? And that's what we should be talking about, is what the long-term impact is going to be. Yes, we're going to increase and stimulate the economy today, but what impact will that also have in 5 years, in 10 years, and in 20 years?
Yeah, you make an excellent point, and I think our most significant economic problem is the daunting fiscal future that we face. I mean, the arithmetic doesn't work. Something's going to break if something doesn't change. It doesn't have to happen this year, and it won't. It doesn't happen to happen next year, and it won't. But in some point over the next 5 to 10 years, it's going to become very clear that the fiscal situation is untenable. So, and you have 3 choices, really. One is do nothing and let the deficits increase, and that'll be catastrophic because rates will rise, it will undermine investment, the economy will struggle, we'll have many more problems. The other option is to raise taxes, and the third option is to cut spending. And that's it. Those are the 3 choices. And obviously they're very difficult choices that you're going to have to make, but you're going to have to make them, and you're going to have to figure out a way to do it. But that is clearly our most significant economic problem. And let me just say, though, the long run is made up of a lot of short runs, and we are now in a short run that is very debilitating and painful, and people are obviously under a lot of stress. And I think we can do some things in the near term to alleviate that stress without jeopardizing our long-term economic health. And that is a reasonable discussion to have. But that is not to say we shouldn't have this discussion about what we're going to do about our fiscal problems in the long run.
I have 10 seconds. So I just kind of want a yes or a no, or just an an answer. We have to be able to, we have to stimulate the economy between $50 and $100 billion into the economy or more. How do you recommend we do that? Do we print more money, or do we borrow it from foreign investors, like we have been? I mean, so one of the two. So which one are we
I
going
thought
to
you
do?
said yes or no.
Well, I know what the answer is.
No and no.
But we've got two options, correct? Or is there another option? I don't
Borrow
know.
money. You're going to have to borrow money.
So we're going to now. So we borrow money from the Chinese to ultimately buy more Chinese products. I wish I was in that business to lend somebody money that's going to ultimately buy my products.
Well, that's not quite fair. Yeah, that's not quite fair. You know, put it into a bridge or a road, and you're
Well, that would
paying
be
good,
wonderful,
hard-working
yes.
Americans. Yeah.
I yield back.
Time is expired. Ms. Clark.